Now, for more on the equity and commodity markets, we're joined by two experts. We have Robert Robotti. He is the president and founder of Robotti Company. Bob Robotti used to be a vice president at Gabelli and Company. He was a member also of the Securities and Exchange Commission's Advisory Committee on Smaller Public Companies. Also with us, we have Frank Holmes. He helps manage $2.5 billion as the chief executive of U.S. Global Investors. His precious minerals fund has outperformed 88% of its peers over the past year. Gentlemen, good to have you with us on Bloomberg. Frank Holmes, I want to come to you because gold futures are a record. What are we, $1,418 now, something like that? Is this going to go higher?
Yes, there's several factors. One is the fear trade that most people focus on, but it's the love trade.
Fear and love at the same time.
It's love. And when you get China and India, with GDP per capita rising 6 to 8% per year, and a natural affinity to give gold for love, you have a huge pent-up demand cycle.
A pent-up demand cycle. Bob Robotti, what do you think? Gold going higher?
I guess good chance of that. Yeah.
Good chance of that. Yeah. Frank Holmes, what stocks would you be invested in if you want to take advantage of the rising price of gold, or you just buy the exchange-traded fund, GLD?
No, I think, first of all, you buy some gold jewelry for the one you love. Because if you buy a gold fund and it goes down, you're not going to be a good camper. But if you can buy
Well said, Frank Holmes.
Yes.
Well said. You know exactly where the power in the world rests.
Absolutely.
All right. So first buy some gold jewelry.
Some good quality
then
gold jewelry.
And
then you go buy some good quality gold stocks. Unhedged gold quality stocks. And we've shown that we can outperform gold equity ETFs by focusing on those that have certain metrics. So companies like Franco-Nevada pay a dividend once a month. Lots of cash.
That's a royalty company, right? Franco-Nevada. What's a gold royalty company?
It's a sweet business. High profit margin, 70% margins, high returns on capital, and basically they fund projects coming on stream, and they pay that out in dividends. So it highly correlates with the price of gold, and it's probably a lower beta than some of the higher risk stocks, but it's a nice, comfortable way and run by first-class individuals. Now we want to step out and take a little more risk. Agnico Eagle. Great management again, and they have long-term warrants you can buy. That 4-year warrants are left. They give you a greater beta alpha on the upside to a rising gold market.
Beta alpha, beta meaning just it moves a lot more.
Bloomberg has two magnificent audiences. One that's basically very technically savvy that would relate to those words.
Right, they already know beta and alpha,
they know.
Right?
And it gives you, the warrants give you more of that leverage, intellectual leverage, not borrowed leverage. Whereas Agnico Eagle is just a great company and has tremendous upside potential to rising gold prices. Then I mentioned before Remarco, which is down in the Carolinas, developing project, and Maduro, which is up substantially from the last time I was on your program. That if I take a look at some of these other gold stocks that have valuations of $500 per ounce of gold in the ground, and Maduro has gone from 18 now to about 28. So if it was to go to just 100, you have a spectacular upside. Other deposits, 10 million ounces, 1 gram of gold. I could give you comparables out there of other companies that trade at substantially higher valuations. So companies like that.
All right, well, we're going to talk also about the seasonality of gold. Bob, I want to bring you in on the oil situation right now. Oil just under $90 a barrel. I think oil prices are going higher.
In the short term, I'm always an agnostic on where prices are going to be. I don't think you kind of know. I do think the area we're focusing on quite a bit is natural gas, because I do think that,
$4.50 per million BTU right now.
And that's right. The disparity in the cheapness on a BTU basis of natural gas, we think there's a long-term decade positive in terms of what the growth is in that. And the stock we like in that market is a company called Toromont, and it has 2 divisions, and it's also particularly timely. They recently announced they're going to spin off the 2 divisions. One of them is a business that builds and sells compressors, and the other one is a Caterpillar dealer that therefore is tied into a lot of different things, including mining as a bigger growing component. The reason for the timing of the spinoff is that there's been a consolidation in the supplier base that's really important, because there's potential conflicts. The Caterpillar business, having bought Bucyrus Erie, is getting further and further into the mining business. The Enerflex business, one of their larger
well, Enerflex is how you actually got into Toromont, right? Because you were a shareholder in Enerflex.
That's right. A year ago, Toromont merge together their compression business with Enerflex's business, and that's what's happening is in that business, a key supplier is Waukesha, which is owned by Dresser, private company, now bought by GE, and GE's intention to grow that business potentially is going to put them at conflict with Caterpillar, so therefore the spinoff is particularly timely, and we think that both businesses, seeing increasing activities, and there's a significant backlog of business that kind of comes forward, we think, in a short period of time.
When you look at where to deploy capital right now in spaces like gold, do you also consider that, gold has got a big seasonality to it? That's something that you've looked at quite often. Is there a seasonality factor that we need to understand?
Yeah, very, very much so. And that's love. That's the gold demand of love. And we start off with the season of Ramadan. Then we go to Diwali season of lights in India, which is the most profound and significant. Then we are now in Christmas season. And then we're going to have Chinese New Year. And so when you have those combinations coupled with QE2, which now gets the fear trade, it's called, lots of money supply going in the system, then all of a sudden gold starts to get a new life to it. So you have two cars sort of converging in the same lane.
Do you think that Fed Chief Ben Bernanke's intention is to help increase the price of gold, or is that just, unavoidable circumstance?
I think it's an outcome, but most people that think it's a fear trade, it's predominantly a love trade right now.
A love trade for gold.
It's a love trade, and gold could go to $1,500, and that may be an extra $100 out of fear, but it's predominantly a love trade. And so important to see that those countries in the world which have very low debt as a percentage of the GDP, rising GDP per capita, and a natural proclivity and affinity towards gold as a gift for those they love. That's the big part of the buy side.
Emerging and developing economies. Exactly. Well, I'm glad we're mentioning this, because I know that, Bob, one of the other companies you've been interested in, First Pacific.
Correct.
This is about a play more or less on emerging economies, right?
Right. Well, of course, I think all the commodity issues is predicated in large part on the growth of the emerging markets. But, I guess we're not just in the commodity end and energy end of the business. And this is a company that, has a $5.5 billion $3.5 billion market cap with $5.5 billion of underlying investments in 4 public companies. And, of course, the markets are the Philippines, the largest investment they have.
The Philippine telecom, right?
Is the Philippine telecom, right? And it trades at 11 times earnings. It actually, on a trailing 12-month basis, has a 9% dividend yield to it. It's a duopoly business. The penetration rate for cellular is still only 70%. There's 100 million people in the Philippines. So, it's a relatively cheap stock, and here you have this overlying holding in that. The second biggest investment they have is about a third of their total investments are a company called Indofoods, a large consumer-branded company in Indonesia, 240 million people, clearly a country that we think is going to potentially outperform some of the BRIC countries, and, modest valuation in that too. So you get through the holding company, a 2/3 discount on these companies, and with the underlying investments extremely cheap.
Why the discount, though, Bob? I mean, it's just because people haven't done their homework? They haven't actually added up the price of the underlying assets?
No, well, it actually trades at a smaller discount today than it did a year and a half ago. It traded at 50% of what the net asset value was. The people don't like holding companies. The concerns about you really kind of can't get behind the asset necessarily. We like the shareholder group, the control shareholder here. They've announced a buyback program. When you have a company that trades at a significant discounts to the pieces, buying back stock is a way to, on a low-risk basis, further increase the intrinsic value to shareholders. So that makes sense. So, we think they're doing the right things in the right places. And, for whatever the market's, strangeness is in discounting things, we don't care too much about that. But it gives us an opportunity to invest on a low-risk basis and, at greater valuation opportunities.
And where the company trades in Hong Kong, First Pacific?
It does trade in Hong Kong. It's, 142 is the stock there. And so that is the market where it does trade.
Well, I'm glad you bring up Indonesia, because you're not the only person that's looking at Indonesia. And I know that they have big coal deposits, for example. And Nate Rothschild's has been reported that because of a holding company that he's got in London, Velar, that is going to be a big holder of Indonesian coal assets. Frank Holmes, you going to be paying a visit to Indonesia anytime soon?
Yes, our team has been over 12 times this year to date in Asia. And Indonesia has the lowest costs for manufacturing. In fact, you're now seeing Chinese manufacturing companies outsourcing to Indonesia. They have cheap energy on a relative basis, so that's not going to be a big factor of their cost structure. And they have open policies to create jobs, and that's the real key factor. So I love it. I totally agree with Bob here. Is it's this particular company, and what gas prices seem to have finally broken up after being a great lull earlier. But what's really important to look at oil. Oil demand has gone through the 2007 peak price levels. The demand, the prices haven't, but the demand, where's that coming from? Non-OECD countries. So the economic growth outside of America is very significant.
That's why we have to watch more than just the Department of Energy's drawdown of oil and stocks.
Correct.
We got to look at what's happening outside the United States.
And that's why you're touching $90 a barrel. And historically, oil comes off between now and February, but it's remaining strong because of this other robust economic activity. America can export to those countries our high-quality products.
Got to leave it there. Frank Holmes, U.S. Global Investors, Bob Robotti, Robotti & Company. Gentlemen, thanks for your insights.